What is up, traders, and welcome back to Explain the Charts. Today is November 13th, 2025, and we are breaking down the chart for Amazon, ticker symbol Amazon. The stock is a hot topic right now, having just hit a new all-time high following a blockbuster earnings report. First, we'll cover the news driving this price action, and then we will jump into the charts to see what they're telling us about the path forward. So, let's talk about the catalysts behind this incredible run. The primary driver was Amazon's fantastic third-quarter earnings report released at the end of October. Net sales jumped an impressive 13% year-over-year to more than $180 billion, crushing expectations. Most importantly for investors, Amazon Web Services, or AWS, saw its growth re-accelerate to over 20%, bringing in $33 billion in sales. CEO Andy Jassy directly credited this powerful performance to the company's advancements and strong demand in artificial intelligence. As you can see on the chart, this news caused the stock to gap up massively on October 31st. This surge was covered extensively, with outlets like USA Today highlighting the new all-time high of $258.60 reached just last week. However, the narrative isn't entirely one-sided. MarketBeat has pointed out that while long-term catalysts like AI and AWS remain strong, the stock faces short-term pressures. These headwinds include potential litigation risks and simple profit-taking from traders after such a huge and rapid advance. This perfectly explains some of the pullback and consolidation we have witnessed over the last few trading sessions. Now let's translate this news directly into our technical analysis on the daily chart. The overall trend since the major low back in April around the $161 mark has been powerfully bullish. We saw a period of sideways consolidation from July through September, where the stock traded in a range between roughly $220 and $235. That was followed by a sharp sell-off into October, which found a bottom near the $212 level before the earnings release changed the entire picture. Let's zoom in on this powerful earnings gap, as this is the most critical feature on the chart right now. On October 30th, the day of the earnings announcement, Amazon closed around $222. The very next day, it opened at $250, creating what's known as a breakaway gap. This type of gap is an extremely potent bullish signal, often marking the start of a strong new leg up. The price continued that momentum, pushing to the new all-time high of $258.60 on November 3rd. Since that peak, we've seen a healthy and expected pullback, with the price now consolidating around the $244 area. This aligns with the news reports of profit-taking and investors weighing short-term risks. With that context, let's identify the most important price levels to watch. Immediate resistance is clearly the all-time high at $258.60. A break and close above this level on strong volume would confirm the uptrend is continuing. For support, the first minor level to watch is the recent swing low around the $242 to $243 zone. A much more significant support level is the top of that massive earnings gap, right where we are trading now at $244. The bulls absolutely need to defend this level to maintain the immediate bullish momentum. If that $244 level fails, the next major support area is the bottom of the gap, way down around $223. A move to fill that gap would signal a significant short-term bearish shift, although it might also be a prime buying opportunity for long-term believers. Now let's switch to the 1-hour chart to analyze the short-term structure. Here, we can clearly see the downtrend that has formed since the peak at $258.60. The price has been consistently setting lower highs and lower lows, which is the definition of a short-term bearish trend. Yesterday's session saw a notable drop from near $250 down to our current level around $244. This confirms that sellers have control on this time frame. For the bulls to regain control, they must first break the upper trend line of this descending channel. A key level to reclaim would be the most recent lower high, which sits around the psychologically important $250 mark. Finally, drilling down to the 15-minute chart gives us a view of the intraday action. We can see yesterday's sharp sell-off in detail, finding a temporary bottom at $243.75. Today's price action has been characterized by tight consolidation right around the $244 level. The volume during this consolidation has been fairly low, which suggests this might be a temporary pause rather than a strong reversal. Intraday traders should be watching for a break below yesterday's low for a potential short trade. Conversely, a strong move above the intraday resistance near $250 could signal a long entry opportunity. This coiling price action suggests the market is building energy for its next significant move. Alright, let's bring it all together for a final summary and some unbiased predictions. Fundamentally, the long-term outlook for Amazon is very bullish, backed by incredible earnings and dominance in AWS and AI. The daily chart confirms this with a powerful uptrend and a massive breakaway gap. However, in the short term, the stock is in a necessary pullback after reaching a new peak. The key resistance remains the all-time high at $258.60. Critical support levels are $244 at the top of the gap, followed by $238, and then the gap fill level around $223. My bullish scenario is that if the price holds this crucial $244 support, there is a 70% probability of retesting the $258.60 high within the next few weeks. My bearish scenario is that if we get a decisive close below $242, the odds of testing the next support at $238 increase to about 30%. A move to fill the entire gap would require a significant negative catalyst or broad market weakness. Always watch for a surge in volume to confirm the validity of any break of these key levels. That wraps up our detailed look at Amazon. As a final reminder, this video is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own thorough research before making any decisions. Consult with a qualified financial professional to understand what is suitable for your individual circumstances. If you enjoyed this breakdown, please hit that like button, subscribe to explain the charts, and drop a comment below with the ticker you want us to analyze next. Thanks for watching and trade safe.